So just 2 weeks ago, high-flying mega tech stocks and their chip-making cousins were powering the Nasdaq 100 index to yet another record. But the feast now appears to be over. The index tumbled 2.8% on Thursday. Let's get to Tasha, Keeney, Director of Investment Analysis at Ark Invest. Ark manages several actively managed exchange-traded funds and invests extensively in tech stocks. Tasha, good to have you with us. Not too long ago, we were talking about how, the Mag 7s, they're invincible, but of late, maybe, the story no longer stands. What's your take?
Well, you know what, Ark, we're long-term investors. We look out over the 5 to 10-year time horizon here. So I'd say broadly, we're still very bullish on innovation. There's been a lot of talks of the new administration, of course, for technologies that we look at, for instance, autonomous vehicles. If the regulatory path is streamlined for robotaxis, which we think could be largely beneficial, they'll save lives. We think, the market opportunity is measured in the trillions. That would be a good thing. So I'd say that, long term, our focus is still there. Short term, I think there could be some uneasiness, but overall, we think that, we're still very bullish on innovation broadly, on all the tailwinds that we've been seeing from AI over the past year. So I'm excited about it.
Is it uneasiness or is it panic? I mean, we have NVIDIA slumping 20% in 2 weeks.
Yeah, I think there's a lot of uncertainty right now, right? And we'll likely get a lot of answers as there's sort of more clarity on, we saw today there's some back and forth on tariffs. We haven't quite gotten the end state yet, and we'll likely get those answers, and that'll, I think, lead to some settlement here. But again, I think broadly we're excited about innovation. I mentioned robotaxis could be a multi-trillion-dollar opportunity here. We've seen drastic improvements in AI. Autonomous logistics, another area that I look at. This is really the year for autonomous transportation. I mean, in the US here, we're going to see driverless trucks hitting the roads very shortly, any day now. Drones as well, delivering packages for, a fraction of the cost of today's transportation effort. So, innovation broadly can lead to positive deflation. So I think, letting that innovation, again, easing the path to letting that innovation come to its full fruition is a good thing.
Well, Tasha, long-term investors have to look at near-term developments as well, because that may dictate what happens in the long run. When you take a look at the AI space, the big tech space that you're in right now, is China, in fact, upending that AI trade? How much of this has to do with developments in China, in AI?
Yeah, this is a market that we're closely watching. Of course, we're seeing the economy turn around there. It's interesting to see the developments that we're seeing out of, the DeepSeek R1 model, for instance. We still see, U.S. large language models on a performance basis, depending on what benchmark you look at, surpassing their Chinese competitors. But I'd say that broadly the story is that, AI training costs are coming down. This should be beneficial for the whole industry. It'll certainly be beneficial for areas like robotics and embodied AI. So I think that, that's something that you can say broadly, that, despite sort of these fears of Chinese competition, like globally, where are we headed here? AI is going to boost productivity, and that's overall good for the economy. And, we still see the U.S. as a leader in many of these areas.
So given the optimism that you hold, would the sell-off be a buying opportunity for you? Would you be picking up more NVIDIA shares, for instance?
Well, I can't say specifically about any future trades that we would make. But, I will say that, again, we look broadly at innovation. I actually particularly focus on the robotics space here. So as NVIDIA pertains to robotics companies, it powers autonomous cars. Companies like Tesla have decided to make their own chips in-house. But NVIDIA is still, the top choice for many players that are unable to make their own inference chips. And so I think that, relationship will likely hold for the near-term future here for, again, one of the largest markets that we see in AI.
We're obviously looking at a repricing in the growth stocks like NVIDIA and so on and so forth. I'm just wondering, how are you looking at this, how this might play out?
Yeah, so, in general, we use certain price swings as opportunities in our portfolios. I think that we look, I can't say anything about what we would do about immediate trading activity here. But I will say that we are, bullish on this is the year for innovation. It's the year for robotaxis, as I mentioned. We have companies like Tesla that plan on launching these platforms. Tesla plans on launching in June. So I think these are a lot of important catalysts that we have to look forward to later in the year. So I look forward to those.
Okay, let's take a look at the themes and the kind of stocks that you're looking into. You talk about innovation, you talk about robotaxis. We're looking at those in the Chinese market as well. There are big players there, and it does seem like optimism is returning in the market that this is the place to be. Would you perhaps relook at some of these stocks in China? I mean, at one time you were a buyer, Ark Invest was a buyer of Chinese stocks.
Yes, we do still own some Chinese names. BYD is one of them, for instance, in the electric vehicle space. But I'd say broadly, we're monitoring this activity. If you look at, for instance, the auto market, and as I mentioned, robotaxi is what we think will be one of the biggest opportunities here. Price competition in China is fierce, and I think it'll continue to remain so. I mean, the price of ride hail on a U.S. equivalent basis is roughly 30 cents per mile. In the U.S., you have a nice price ceiling of around $2.50 per mile for technology companies to launch driverless cars. So that's a tough market to come into, no matter what player you are, even if you have amazing technology. So I do still think we'll see some of those. We're taking a case-by-case look at the different technologies that are covers to find those opportunities. But again, it's something that we're closely watching. I mean, these are real competitors here. Obviously, China is a very important market, and we'll have to see.
Are you concerned about risk from the regulatory landscape? Perhaps Trump could clamp down on U.S. companies holding stocks in Chinese companies?
Again, on policy, we'll have to see where it plays out. I think, our founder, Kathy Wood, I think she'd say that Trump, he is ultimately going to be judged by the economy. That's the benchmark that he will be measured on. So she thinks that he'll be, careful in terms of which policies he rolls out, and in terms of thinking about that. So, right now we're seeing a fair amount of negotiation happening on the back end of these deals and announcements that we're seeing. It's still, again, in flux, as we saw from today's tariff announcements. So we'll have to see. But again, we're looking at it as a real market in terms of certain technology leaders. Price competition very fierce there. It's always going to be. We'll have to see how the policies play out.
We've been talking about robotaxi, and that's a big idea for 2025 for Ark. I'm just wondering how best to play this. I mean, Tesla, obviously a big player in it, but, lots of questions about whether it will do it alone and whether it can do it alone.
Well, I think that's, that's actually Tesla's special sauce, really, is their vertical integration strategy. The fact that they're a vertically integrated auto manufacturer here. They're developing the technology in-house. They're building compute in-house. They're building, the humanoid robots of the future. That's a real competitive advantage, because if you look at other players, say if you're not an automaker and you have to partner, getting to scale is a different equation for you, right? Because then you're buying vehicles at cost to put on the road. You're having to negotiate relationships with automakers in order to do so. So we think that the software companies, the technology companies here will be the winners. And Tesla's a clear leader. I mean, they already have scale because they have customer cars on the road that are collecting data. If you look at the number of miles of data that we think that Tesla has access to versus a player like Waymo, which is Alphabet's effort, that's roughly, 100,000 miles, say, per day versus 10 million. So it's an order of magnitude difference there. So I think that data advantage is really critical for Tesla. So that's what we think will give them a lead in this space.
So one analyst did say that in order for Tesla to be a real player in the space, it has to transport about 100,000 customers in a week. And so far, it hasn't come close to that, or else it becomes just a fiction. How soon do you think Tesla will get to that?
Well, I think a few things. The measure of progress, we're looking for the June launch of the Robotaxi network. That's what Tesla's promised here. I think that, we know that they've been testing the service in California, and they plan to launch in Texas. They could launch in both states by the end of the year, potentially. What does initial successful launch look like? Well, Tesla actually has a different strategy than others because they don't have a geo-fenced solution. So when Waymo goes to a new city, they have to, unleash cars on the road, gather data from that experience, and then become comfortable enough to really start the commercial service. For Tesla, it's different because they get information and data from customer cars on a daily basis that travel all over the U.S. and really all over the world, which could set them up for, potential future international launches here. So I think that success will look like them launching as promised in June, and they could actually be one of the first players to scale because they have millions of cars on the road. They could potentially pull from those as customers may choose to sign their vehicles up for the fleet, or they could pull from production vehicles and sort of make that choice depending on consumer demand at that point in time. So the point is, they have access to and will have access to really vehicles that number in the millions versus their peers, which at most have vehicles in the thousands, really. The last reported number that we got from Waymo is less than 1,000 cars. Perhaps they have more now, but that just gives you an idea of the scale that Tesla has versus others. So once they lower the cost per mile to below that of human ride hail, I think that's when the service really takes off. So I'm excited for that future, and I think that Tesla could be the first company to do this at scale.
Right. You're invested in Tesla. You're also invested in BYD. How do you compare the two?
Yes, well, BYD is, of course, a leader in electric vehicles broadly. Electric vehicles are taking share and will continue to take share from gas combustion cars because we believe that they're writing down a Wright's law, which says that for every cumulative doubling in production, you get a corresponding reduction in price. They have a more attractive cost decline curve than gas-powered cars. It's a newer technology. So despite the recent pullback that we've seen in the market, longer term, that's the real story with EVs. And of course, BYD is a leader in China. Versus Tesla, they don't have the software edge. For instance, they're launching assisted driving features on their vehicles. They're not launching Robotaxi services. That's where I think the real market opportunity is here. The autonomous ride-hail opportunity is what I think will be measured in the trillions versus these add-on services that you sell with consumer cars. So I think that they're very well positioned in the electric space. The future of the auto industry is really autonomy plus electrification.
Right.
So that's what Tesla has.
Tasha, before we let you go, just your thoughts on cryptocurrencies, Bitcoin in particular. I mean, we saw gyrations today on the back of, the U.S. saying it's not buying more Bitcoin for its reserves. I'm just wondering, I mean, there's that assumption made by Ark Invest that Bitcoin will get to $1.5 million by 2030. I mean, what is the leading assumption for that to happen?
Yes, well, first, I'd encourage everyone to go look at our Big Ideas report. And we have a whole section on Bitcoin there with some great research from my colleagues that I likely will not do justice. But, overall, we're seeing a lot of positive developments here. Like today, we saw, the U.S., the new administration announced the Bitcoin reserve. They're keeping some of the confiscated Bitcoin that the government already had. But really the announcement is that they have no plans to sell this Bitcoin. Right. So in our research, we've done a lot of work to show that we think that Bitcoin really has staying power here and is a stable form of monetary policy. We again, in the report, we have some examples where if you look at, the growth rate in the supply of Bitcoin compared to gold, it's actually slowed versus the long-term rate of gold. So again, that to us suggests staying power. So excited about these announcements.